please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, we're going to analyze some numbers now and talk to some companies about the way forward. Real estate is on our radar, and one of the best minds in the business, Irfan Razack, the Chairman and Managing Director of Prestige Estates, joins us now to tell us about the way forward for the market and his own business as well. Mr. Razack, good morning. FY18 is now behind us. You had a fairly good year with a revenue growth of 15%, profit growth of 14%. But just tell us a little bit about what you expect in FY19. You've laid out a guidance, new sales value of around 3,500 to 4,000 crores. Your turnover is not very different from what you did in FY18. You're expecting a turnover of 3,500 to 4,000 crores. Is this a conservative guidance, or do you expect that demand is a bit subdued in the industry?
No, the guidance that we've given is for the sales that we will do in the year FY19, because the turnover is very different from guidance, from the sales. The basically top line revenue is more related to the amount of revenue that we can book based on the percentage completion method. And the sales are the actual sales that happen on ground, quarter on quarter, year on year. Last year has been good. FY18 has been good. We've clocked about 3,300 plus crores of sales. And we look forward to a similar run rate, if not more. That's why we've guided 3,500 to 4,000 sales in the current year. It's about 15% higher than the what we've achieved at the moment in the previous year.
Okay. Mr. Razack, good morning. Can you just, to the best extent you can, give us an idea of how the next 3 quarters, you've already seen 2 months of this year. How is it looking? Is it looking better in terms of demand? Do you think you can be, push up realizations and margins? Or will there be resistance, so you will bank more on volumes than value? What are your thoughts at this stage?
Now, see, we have to do a blend of both volumes, value and all of it. But as you rightly said, we are already 2 months into the quarter, and the quarter is looking good. And the other good news is, since the uncertainty of GST, RERA is behind us, we have got a slew of new projects which are almost approved or under approval, which will be coming into the market, and which we can launch without any difficulty once it's registered with RERA. So even these are, so there's a nice steady launch pipeline that we have quarter on quarter with products across different parts of Bangalore city, and we've also got something happening in Chennai. So I believe that there is a lot of scope, and the current year also will be equally good, if not better than the previous years. And but rightly pointed out, as far as margins are concerned, it's a balance of both the things. It's the efficiency of how we are able to bring our construction costs in line and also get a better realization, because customer is definitely not willing to pay for either my extravagance or my inefficiency. And I think the teams have been sensitized on this, and I believe that going forward we'll be clocking much healthier margins as we go along.
Okay. I also wanted to understand what the impact of the ordinance to amend the IBC, what would that have, the impact be on the real estate space? I mean, home buyers will now get a bit larger say as far as insolvency cases are concerned. What would your own thoughts be?
Yeah, I mean, now it all depends. If some company gets into trouble, they are in trouble. And always, I mean, the law has been made now, but I always believe if you've received advances from your customers, you are responsible for those advances till you deliver the product that you have promised to deliver. Of course, it's also the accounting methodology and all of it. And there is also a likelihood that this quarter the accounting methodology itself may change, which will be very drastic, which is that Ind AS 115, and we're still not clear. I think we'll come to know about it very soon. which method to adopt, because currently all real estate companies are adopting the percentage completion method.
Yes.
And there is a likelihood that we'll be pushed into adopting the completed method, which I personally believe is a good one, but then it'll be, the numbers will be very lumpy. You'll have 2-3 quarters of losses and then a quarter of huge profit, which really will not give you so much of, so nobody can analyze exactly what's happening. But then that's what's real estate. But this percentage completion method was something that gave you a steady revenue throughout every quarter. But we'll wait and watch. The representations have been made by the industry. It all depends on what the Finance Ministry and the Commerce Ministry finally decide.
But generally, the new IBC norm, the amendment in favor of homeowners, will it be a niggling worry? Or, I mean, I don't even know if all homeowners can unite and present a forum. How are you as a person in the industry looking at this development?
No, I think it's a good move. I won't say it's a negative move. It just gives that much more confidence to the buyer that they will not be left high and dry and stranded in case something goes wrong. And actually that will work more positively in favor of home buyers rather than and the companies who are building homes, that it gives the confidence to them, listen, that you're fully secured. It's like if you're depositing money in a bank, you're not sure whether you're going to get that money the next day. That's not a good feeling. Similarly, if somebody is depositing money with a developer, they also need an assurance that their money is safe.
No, I just wanted one last, clarity from your end. You mentioned this Ind AS 115. Everyone's talking about it. It seems imminent right now. So, just for our viewers, this actually replaces the existing revenue recognition method, right? If this is done, how much of an impact, how much of a negative impact do you think this would have on the industry?
No, it won't have a negative impact in any sense. But what happens, the reporting changes. And you will not get the clarity on exactly, I mean, in fact, I prefer this, the completed method, because then you're showing your profits at the end of the day, what actually you have earned. But now you are doing it based on the estimated cost and estimated income. Now it's on all real. But then the only, again, the overall problem is that the income tax department will want you to still follow the POS method so that the tax payment doesn't get delayed or doesn't get deferred. But the accounting standards are telling you one thing, so you need to draw up 2 balance sheets and 2 P&L accounts, which will be very difficult for the companies itself.
Confusion ahead. All right. We'll leave it at that. Thank you very much, Irfan Razack, for joining us with all those details.